All right, welcome everyone to the first episode of the Trading Audit. In this series, I'll be taking interviews with random people who want to take a deeper dive in their own trading and post it on YouTube, because we've always seen the Dave Ramsey kind of financial audits where people call in, they say they have all this debt, and then he digs into them and provide some good information. But I haven't seen it with trading, so we're going to try it on my channel and see where it goes. If you're interested in doing a trading audit yourself, you can email me at stocktrickswithnick@gmail.com. That email is in the description of the video, so you can find me. Just shoot over trading audit, and then I'll get you the list of questions and we get going from there. But my first guest today, I'm super excited to have Charlie on. I know Charlie from Twitter. He's been involved with the Trading Line group, and he's been learning a ton. So today we'll be going over kind of an introduction, getting to know Charlie, getting to know his background in trading, what he does well, what he has some area to improve on, and then go through some of his trades in August. Charlie has sent me all the trades that he took in August, and we'll be highlighting 5 or 6 of them, depending on the time limit for this. So Charlie, thank you so much for being my first guest. And if you just want to introduce yourself a little bit and how long you've been trading and how you got into trading.
I'm Charlie, and I've been trading for about 2.5 years. I started just as the COVID crash started, actually. And I don't trade full time, or I do trade full time, but I don't rely on it as a source of income. I'm mainly just learning so I can eventually make it my full time. I started off just thinking it'd just be easy. I watched all these videos on YouTube. But what really got me into it is my dad emphasized the importance of money management, really earning in my teenage years. And from there, he showed me some things about what he does, and that got me interested. And I started my hand in futures trading, and I got burnt pretty bad there. Then I tried options, trying to get these alerts from, dumb services. And then I thought maybe I'd be smart and maybe fundamentals got something and I can be an investor. And then I try to invest all through 2020, 2021. I keep averaging down. I'm losing more and more money. And I'm just like, because during that whole period, I was also experimenting with trading a little bit and technical analysis, understanding that more. But so I had those two sides, and I kept losing money on the fundamental side, but then the technical side just made more sense. It's like, if I cut my losses and I keep my winners bigger, I'm going to make money. So eventually I got fed up with the losses. I'm just like, screw this. I'm going all in on technicals and managing the risk reward relationship. And since then, there's no more losing money. It's been a lot better.
That's awesome. So you kind of had like the reverse of what I would say the traditional entrance into the market is. Like, usually you start with stocks and then you hear about options, get really excited about the potential gains there, and then go on to futures from there. But what brought you into futures trading first?
I don't know. I think it was just a potential to get rich quick.
Yep.
I wanted to make money every day. And I was like calculating, like, ooh, I can make a full-time living just making like $100 per day. Each tick is $12.50. I'm gonna get so rich, and I end up losing like a lot.
Right. Yeah. And I know we talked about this earlier, but that pain of loss is actually kind of a wake-up call and gets you to kind of focus and find the strategy that works with like your personality and that actually has the results, right?
Yeah. I was watching a movie, and I kind of relate it to a near-death experience. Obviously, It's not, but when you take so many losses, you're like, okay, I cannot do this anymore. This is not going to work. If I keep doing this, my life is going to be ruined forever. And just like, if you have a near-death experience, you're like, okay, life is precious. I got to make it worth it. When I lose all this money trading, I can't keep losing money. I have to figure out how to make this work. So.
Exactly. And trading is a very frustrating thing, because you think like, if you're an intelligent person, or if you're like really into math, and that's kind of the background that I came in from, you think you could just like outsmart the market, but you get humbled pretty quick if you try to do that.
Yep. Yeah.
So at what point did you start the technical analysis side of trading? You said you got in kind of in the COVID crash, and then we rally, so everyone's making money hand over fist. But then once you started to learn risk management, when did you get into that part?
I think it would probably be the second half of 2021. I shout out to Richard Moglen, man. His interviews is what got me here today. All of the interviews with the US investing champions. See, what's good about them is they have proof behind their returns. So when you
Yep.
listen to them and understand what they're doing, you can feel content because you know they actually know something. They have proof behind their returns. So I started off that. I think Oliver Kell was a big inspiration there. After seeing that, that's where it started.
That's awesome. Yeah, in the second half of 2021, that's when a lot of the growth stocks, March of 2021, really, we started hitting those growth stocks to the downside. And I really like what you said about all the US investing champions. And they have something in common is they're very humble and they talk about losses. And that's something we don't see like on TikTok ever, Twitter very rarely, but really like trading well for an extended period of time and the trading consistency is all about managing the downside when you're trading. So the best to do it, always stress that. So there has to be a reason behind that, right?
Yeah, winners are good losers.
I love that. I love that. Next question is, where do you consider yourself in your trading journey? TraderLine put together kind of 3 different phases of traders go through. You have your beginner trader, and there you might have a lower win rate and your losses vastly outperform your wins. So you're just significantly unprofitable for a long period of time. And I'll say this, most people start there unless you started in 2020. Like a lot of people start as an unprofitable trader. I know I started that way. And then eventually you find the right system that kind of works for you, but it still takes time to master. If trading was easy, everyone would do it. So you have your intermediate, your boom and bust cycle. And then finally, once the pieces of the puzzle start coming together and you know when to press your strategy in the right environment, then you kind of become the expert where you're consistently putting in higher lows in your equity curve. So within those 3 kind of beginner, intermediate, and expert, where do you think you're at right now?
I think I'm probably an intermediate. I don't trade my full account, so it's kind of hard to say. Like I know they like to track the equity curve a lot, but since I don't trade my full account, it's kind of hard to actually track that stuff. But because I use a lot smaller size than what I can be doing, but I'm definitely intermediate because I'm not really making a lot of progress yet, and it's not like a full-time thing. So I'm definitely just I'm in the learning phase.
Mm-hmm. And I don't think we ever exit that phase, right? Like we always want to be constantly improving on our system, improving on our signals, stuff like that. But I really wanted to highlight one thing that you just said is you're not using your entire account on every single trade right now. And knowing myself, my second year in trading, I was doing that all the time still. So the fact that you found like the right people to follow, like found the right interviews to research, and then also you're trading a little bit more conservatively than you could, given like where your knowledge is right now, is really both impressive and like something that I want the viewers to stress is your first couple of years, you don't need to be making money to get yourself on the right tracks to be a successful trader. Your first couple of years is all about learning as much as you can and really losing as little as you can. What do you think you struggle with most in trading? I have a couple different options here. Maybe you can hit on 1 or 2 of them, like your trading knowledge, risk management, stock selection, or trading psychology.
Yeah, it's kind of hard to say because it's kind of hard to judge what you are best at and worst at it in a bear market, because it's like you can't really get that many big winners. But I can definitely say that I manage my risk well. It's easy to take losses, but I find it that I'm sometimes over trading. So I would say stock selection is a little bit of an issue. Maybe I'm not picking the best of stocks, and trading psychology would kind of go with that. I don't have any like big tilt issues or anything like that. I've never had anything like that, but that could just be because I'm not trading big size yet. Once I increase the size, which is what I want to do when the bull market starts, so I can get in the groove and make money. But I think that those 2, trading psychology and stock selection.
Mm-hmm. And looking through your log, and I'll put this up so everyone can see, but a lot of your stocks are stocks that I've traded myself, and they're in the right types of groups that we're working in August. So you're hunting in the right place. Maybe it's just not the right type of entry where you have a lower risk entry in this bear market. So if stock selection in general is your kind of weakness, I would still say that's well above where I was even like 4 years into it. And that comes back to finding the right people to learn from and just like ruthlessly studying the market. You kind of touched on this, but you excel, you would say, at risk management the most?
Yeah, it's like I think there becomes a point where you just completely internalize the fact that losses are part of the game. And when you hear, I've watched so many interviews, Oliver Kell, Mark Minervini, Ryan Pierpont, these guys they have 30 to 50% win rates. I mean, you'd think that after 40 years, you'd be able to hit it out of the park a little better. But
Right.
these they're losing over half the time and they're still killing it, absolutely killing it. So I just realized that the name of the game is just to keep your losses small and take your profits when you're at a multiple of your risk. It doesn't matter if it keeps going up. Just keep the risk reward relationship intact with the right position size and you will be able to make money.
Yeah, I think you nailed it there. Kind of the asymmetrical risk reward that Mark Minervini always covers is, can I get 2 or 3 times my risk on the trade? And how quickly can I move my stop up to even? How quickly can I sell a piece just to reduce that initial capital risk on the trade and then use that elsewhere, build up your exposure while keeping your risk minimal? So one thing that you said that I really want to highlight is that you don't have a problem taking losses. It's just kind of part of the business. That's something that Mark talks about as well. Every business has expenses, and the more we treat trading like a business, the more we understand, okay, this loss is an expense. It's not emotional, like you're not taking that loss emotionally. You're not saying like, I'm dumb for doing this, or like your ego is getting hit every time you take a loss, because you're keeping, like, looking through your trade log, you kept all your losses in check. I think your largest loss was like 6%, 7%.
Yeah, and that position size was like 1/5 normal size too.
Okay, so we've been getting your background. That's been awesome. You've crushed all the questions. What would you like to get out of this one-on-one the most?
I don't have a very good concrete rule list because I've ingrained a lot of the protective rules, like always take your losses and all of that. But what I find hardest, and I think that's what everyone finds hardest, is when to sell when you're at a gain, especially in this sort of market. It's like I've heard Leif Seraide talk about your maximum favorable excursion, and I've tried that too before a couple times. But it's like I don't have, like, there's no concrete rules I can find to sell into strength and be able to keep your profit. And that's something I've been working on a lot, but I feel like you'd be able to help me out on being able to figure out when's the best time to sell into strength so you can keep that risk reward ratio intact.
Yeah, I think it is definitely the most difficult thing. It's something that I'm still kind of tinkering with myself. But one thing that you already do, which I applaud, is you keep a trading journal, and then you can keep your trading stats from that. So your average gain on winning trades, say it's 5%, right? In your last 5 trades. I always look back like 5 to 10 trades, my last 5 to 10 trades. If my average gain on a winning trade is 5% and a stock already has run 5% from my entry point, then I'm at least taking a third of that position into strength, especially given the market. Right now, today, like, we're filming this on Wednesday, the market rallied, we went oversold bounce, solar stocks ripped higher, but the indexes are still under declining 8 and 21-day EMAs. We're still in a pretty tough market. We rallied on, outside of solar stocks, low volume across the board. So just understanding kind of where the market's at will also be reflected in your trading stats in the most recent couple trades.
Right.
Is that something that you've looked back, like your last 5 winning trades, 6 winning trades, something like that before?
I do. I keep in track, like, if my past 2 trades were losses and things like that. I do notice that, but I don't have a specific, like, sheet for the past 10 trades because it's I should probably do it, but I don't do that yet. I used to obsess over my trading stats and try to always sell into my, manage my trading triangle, as Mark Minervini calls it. But I found that I actually get too obsessive over it because I used to track my trading stats every single week. It's like, if I sell into 3.5%, that's just not paying for my risk. So I used to be obsessive, and if I be obsessive, I won't be making enough money. I have to get 2-to-1 risk reward, and I'm not there yet. So I can't be. I used to be obsessive, and I can't do that now. So
Yeah. So one thing I like to do, especially like either if I'm coming out of a trading slump or my average gain is below 5% on my last couple trades, is once you get one time your risk. So say I have a stop loss at 5% or planned exit point at 5%, and the stock rallies 5% from my entry point. So I'm up one time my risk. I'll usually sell 1/3 into that like 1R or one risk multiple, because by doing that and keeping your stop loss the same, you actually like take your risk of the trade down from a full like 5% to 1.33%, 1/3 of your initial risk. So that quick sell into 1R, especially in a tough environment when your average gain is below 5%, I found it eliminates, or it vastly reduces your downside risk very, very quickly. And personally, like I probably trade a little bit quicker than most people. I'm especially in this market pretty fidgety around things. But I found that selling a little bit larger of a chunk, not just like a quarter, but a third or even a half at one time my risk, that really loosens up the stress that it puts on me, knowing that there's no actual like initial capital risk. That's what I call it, initial capital risk on the trade anymore. And so once we get to that point, then it's like, okay, Nick, I can sit on a winner a little bit. And then if the market environment starts to get conducive to my trading style, that will be reflected in the trading stats. And that's when you can kind of balance the risk multiples. So your distance from your entry to your stop loss, and then your average gain on winners. So maybe you take a third at your first risk multiple. And then if your average gain is below like 5% on a winner, but then once the market starts saying, hey, this is a good trading environment for us, then instead of one time your risk, it's actually one time your average gain. So then you're expanding kind of your first piece as the market environment gets better for us.
I have a little bit of a mental block with selling 1/3 at 1R, because 1R doesn't pay for my risk when I have a 36% win rate right now. So maybe I should try that out, because I actually I have a whiteboard from Mark Minervini's mindset book. He said, get a huge whiteboard. So I have a huge whiteboard, and I wrote, don't even consider selling at a gain until above 2 times risk. So it's kind of interesting that you say that. Maybe I need to erase that.
So that's what I've found, like, especially in this environment, right? Like we're in a bear market. We're still under declining 8 and 21 EMAs until like our trading strategy starts to get those results that, okay, your average gain is a 10% winner or 15% winner, where we're finding stocks that are breaking out and continuing that move where it's easy to make 15% on a nice trade. Until then, we're playing as strict defense as we can. We're trying to go singles and doubles, just like dip our toe in the market, and not try to hit any home runs like we've talked about. All right, next we're going to jump to MarketSmith and break down a couple of Charlie's trades. With the trading audit, I asked that you send me your last month of trades so I can go through, kind of calculate your win rate, average gain on a winner, average loss on a loser, and then take a look at your largest win, largest loss, and then we can highlight some trades to go over, which is going to help the people in the audience and also help yourself. So Charlie sent me 14 trades that he made in August. Of those, he had a win rate of 29% with an average win of 3.83%, average loss of 3.74%. So a little bit more on his winners than his losses. Now, this doesn't take into account position sizing. So he could have larger position sizes on his winners and less on his losses. And then that would make up for the win rate under, what would that be, like 50%? But this is just what I'm looking at. Largest win was a 7.4% gain. Largest loss, only a 6.7%. So right off the bat, really want to applaud you for the average loss, 3.7% in a bear market. That's exactly where we want to be. If we can bring that under 3, that would be ideal. But I mean, second year trading, 3.74, that's awesome. And then largest loss, 6.7%. And you mentioned before that was a smaller position size, but that's one of the stocks that I want to cover in more detail anyway. So we'll get to that in a bit. But So you bought on 8/1, which is this day. And I know
Yeah, the
so
squat.
well. Here, let me actually pop this over so we can get a little bit more information. I know this so well because I took this exact trade, but do you want to just walk us through what were you thinking and where you took some profit and managed your risk here?
Yeah, so I always like to look at charts before they set up, but the reason why, or you want to set it up so we look at it the day before?
Yeah, we can do that. Let's do 7, what is that, 30?
7-29.
29. Okay, so here we go. Day before, Charlie's looking at this trade.
Yeah.
What are you seeing?
You can see the really well controlled pullback into that 21 EMA, just under the 8 or 10 EMA. You see it getting really tight. And the thing that really got me into it was that volume drive. I mean, it is so dry. It's ridiculous. A lot of the time you don't see that great volume drive, I find, but when you do see it, it's a really good sign. It's kind of like a mini cup and handle a little bit, but not really. And then, so that's why I bought it. And then now we can go forward.
Yeah. So also wanted to point out, this is in the biotech group, 4th strongest group at the time, out of 197 in the market. One of the reasons I bought it was we got this big volume on the move up from 5 all the way, what was the top here, $13. So really strong move. And then like Charlie said, we get that volume dry up. So I was looking at exactly the same stuff, which is nice to hear someone else was watching that. So
right. So it was up 157%, up 157% in 33 days. I really like to see that. I love power plays. So it goes out on the first day, and I was really managing risk tightly here. I think I had my stop at minus 2.9%. So basically I buy through that high of that small bar. I think I gave it like 5 to 10% above that, 5 to 10 cents above it, because I don't want to just get ticked in. So it was probably like a 3.3% stop loss. That's where I had it. And I think I sold a third into 2R almost. It was nearly 2R. It was up like 6.6% intraday, it looks like. And then it just squatted. But I already had a third out. So my risk was pretty much covered. And the next day, we'll go to the next day. Next day, it does nothing, or it's progressing. It's good sign. And then next day, that big day happens. But luckily, it was actually a gap up in the morning a little bit, and then it rallied up, which I actually sold a little more into. I got lucky. I sold a little more into, and I'm not sure if I had my stop at break even, but regardless, I got out. I got stopped out, and I got out with a 2% gain.
I think I managed this like exactly the same way. So one thing that I saw is on this day, we broke over $13. So nice round number, but we couldn't hold that. We very quickly went from 13.03 back down through 13 and squatted on that day. And this was a day, we go back a little bit. This was a day that the market came in a little bit as well, we could see. So it made sense that it squatted. It was still a strong stock and a strong group. So outside of selling a little bit into strength where we see prior resistance to the left side of the chart, so taking some profit off, limiting our downside risk. The second day, I didn't do anything either because we had a strong closing range. The market also started to participate and rally higher. And then this is kind of a disaster that you would want to avoid, and you did avoid really well using your stop loss and selling some into strength right at that previous, like we broke over 13, or we might have gapped over 13, but quickly lost it, right?
Right.
And that's another sign, okay, something's weird here. And playing biotech stocks, you have to be very vigilant with your stop losses because they can go against you very, very quickly. So taking a 2.1% gain on this, which was a quality setup, quality group, strong entry right over the previous day's high, nice tight stop loss. I would say, and this is for kind of the audience too, like you see a 2.1% gain and you think that's not great, but the execution, how Charlie handled this trade, this is something that he'll look back on and say, this is an A+ execution type trade.
That's exactly how I look at it. Yeah.
The entry was right. The taking profits into previous resistance was right. And then the risk management on the downside was right. And you see a ton of volume coming to the downside here. So it's easier, like now we reset to today and it's all the way up here, but in that moment, and that's the only time we can manage risk is in the moment. you did it exactly the right way. So wanted to applaud that. And 2% gain on this trade is exactly what you're looking for. Now, let's dial it back a little bit. And I have to ask, what were you thinking on this one? So ESLT, this is an aerospace defense, not a super strong group. And also the daily volume on this is extremely light, only 26,000 shares traded a day. I see this is Israeli manufacturer of surveillance, land vehicles, all that stuff. So I see on the chart, like what you're looking at, you see, and okay, let me bring this back to the day that you traded.
You don't have to do that if you don't mind.
Okay. But yeah, so do you have a volume requirement on your setups?
I have a volume requirement, but it's more focused on dollar volume because that's really what I care about. You know, I do see that it was maybe low on the volume side, but as long as there's dollar volume, I'm pretty much fine with it because I'm not a big player.
Fair. When you see this, it looks like it gets traded in other markets as well with all the gap up and gap downs.
Yeah.
That's something that I personally avoid, especially in a bear market where like we're getting punished left and right for any mistakes that we make. So that's something that I try to avoid, especially with a stock thinner traded, and in not the strongest group at the time. But
right.
Well, I say this, you made 3.6% on the trade. So
yeah, I got a little lucky, but I'll explain it. So I think during the time when it broke out, on that big blue bit day, if you can highlight the date, 8-03, I think, NLC was kind of setting up, getting close to highs, which is what also got me a little interested in looking more at defense names. I was thinking about the theme, but that's not really what interested me. I think the main thing was I wasn't afraid of the gaps because it was an $8.9 billion company. And the ADR is only 2%, which is something I look at. Since it's lower ADR, I can usually lower ADR and high market cap. They're not going to be as volatile, even if they're gapping around. And I thought it was just a really nice VCP setup. Those 2 days right before the breakout was on pretty low volume, which I was happy with. So I bought it through there, and I'll review the trade now. So I had my stop loss, I think, below those 2 tight days, so it was a 1.5% stop.
Mm-hmm.
But I did get some slippage when I bought it. So, but I bought it, it progressed, and I sold it on the 8th, which is when it squatted. And I sold it directly into strength, I think at 2 times. I tried to get it at 2 times risk, but it wasn't 2 times risk because of slippage.
Yep.
But that's what I was looking for. I just wanted to get out because I just felt nervous about the market. And that's something I don't like. I don't like trying to be subjective about when I should sell and when I shouldn't sell, which is why I'm here trying to see if you can give me more concrete rules to sell stuff.
Yeah, so I think I would have handled this relatively similar. So another thing that I want to caution you on, and what I saw like reviewing your trading, your entry points, is you tend to buy a lot of things at either higher pivots or as they break into new highs. And while we're in an unfavorable environment, those like the pivots that everyone sees in the market are going to attract the most liquidity. And in a strong market, that liquidity will push those stocks higher. But in a market where everyone's trying to reduce risk and take liquidity out of the market, basically, the bigger players need those liquid areas to sell a larger portion of their positions. So that's why you usually see like a stock go through a pivot and then immediately reverse while we're in a bear market, if it's breaking into new highs or like a very, very clear pivot that everyone can see.
Right. Okay.
That's why I've had the most success trading stocks like either oops reversals where we gap down below the previous day's low and then recapture that. Typically, if I do that with a market leader around the 21 EMA, I found the most success there, because then you're kind of getting an alternative entry where you're getting in and then people are chasing it up because it's starting to show relative strength. And you still have that tighter stop loss where if you're buying as it extends into a liquid area, you just risk, not now with like EMPH, like that worked today, right? But you're just risking a little bit more that a big player is going to use that liquidity to get out of the market. That's why one of the sayings is you don't buy breakouts in a bear market. just a couple things with this, like the illiquidity, the gapping overnight. I like what you mentioned about the ADR. So the volatility isn't very high on this. But just one thing that you got to look for is kind of those liquidity zones and who's using liquidity. Are we using it to push
Right.
out, or are we using it to sell off into? Next, we have VRTX. This we're going to highlight again, no buying breakouts in a bear market, but leading group biotech, he bought this on 8/15, which I believe is this blue candle. Yes.
Yep.
Breaking out into new highs, but you did buy it a little bit lower. You're 298, 297.50. So he wasn't buying the absolute high. He was buying over this pink bars high, I would assume, 297.76. So right around there. You want to walk us through this trade?
Yeah. So my thought process was this. I've been watching this stock for months now, and it finally looked like some sort of pullback buy to me. It broke into the highs and then pulled back, you know, what's happening often. And then it set up that one tight candle.
Yeah.
It was on good volume drive. Right. And I was trying to buy through that. I got a little bit of slippage again. So, but I get in and it, you know, it just peters out. It doesn't do much. So I got stopped out. I had my stop at the low of 8-11 and I just got stopped out there. Nothing much to it.
Yeah. And I mean, the initial pullback came on lighter volume too. So there wasn't like okay, this stock's going to completely fall apart. It just hit your stop. You respected risk. And you got to respect that. But again, just buying into kind of these liquidity zones where people are looking at all-time highs or very clear pivots, it's going to be tough to do. Now, I have done that a couple times during 2022, but I'm much more quickly selling a larger portion into strength, whether it be a third or a half. The first one that comes to mind, not that we want to cover my stocks, but is TH. This is a potential market leader that twice in 1 week, it got going and broke out. But because it was one of the only stocks that was on everyone's radar, they had a triple inside day going into this breakout. I knew everyone was watching it. So the second it went over my entry point, I got in, and then very quickly it was up 4%, 5%. And I just unloaded at least half as it was going up, because the more people are watching the area that you're getting in, especially during a tough market where there's very, very few number of setups, the more volatility you're going to get in those kind of liquidity zones. So just one thing to keep an eye on if you're trying to buy breakouts in the bear market is you can do it, but I found more success like using that liquidity and using that breakout to sell a very large portion of it into.
Right.
But yeah, so 2.7% loss. Again, you're not even thinking about this if we're not covering it on the channel. So
I'm pretty happy about that trade actually, because I held it through that. You know, usually I get pretty nervous when I'm holding losses overnight. I don't like it, but I'm proud that I held it because I want to practice holding positions for longer. So I'm actually happy with that trade.
Yeah, I mean, so again, I'm very quick to cut losses. And in a bear market, I probably will, if I'm at a loss when the market closes, I'll usually take at least half of the position off. And then if I need to put it on, like on strength the next day, then I'll do that. But just really like, I don't want to lose money in a bear market, right?
Right.
It's not about like flexing on people and being like, oh, I'm up 8% this month in this bear market. It's all about, let's keep our mental capital, let's keep our actual capital ready to roll once we get the correct market to press in. So we got two more stocks and two more trades that I want to cover, OXY and LQDA. First, we'll go with OXY here. Let's see, you entered the stock 819. I think this is the same trade that I took too. So yeah, go ahead to talk us through this one.
I'm proud and sad about this trade at the same time because everyone was talking about this as they broke out on Twitter. So I bought it and I sold half of it on the first day, the same day I bought it. I sold half of it into strength that day. I think it was almost, I got out probably for 7.5%.
Yeah.
I got out half for like, no, I got a 7.5% average gain on everything, but the first day I sold half for like 5%. and then I held it through that gap down. I didn't sell anything under that or through there. And then the next day it popped up again, and I just sold it into, I think it was 3R. I tried to sell it into 3R and just took it
right into that liquidity zone.
Yeah, that too. I was looking at that too.
There we go. Yeah, and so OXY for people tuning in, oil and gas name. That group has been strong. This stock individually, I mean, beautiful pivot set up, but on this day, the news came out that Warren Buffett was asking permission to get up to a 50% position size on it. So now, Charlie, I don't think you have Warren Buffett's cell phone number. I don't think you knew he was putting that out there, but
what's interesting is that the news came out after it broke out. That's what's interesting. And I gotta say, this is the perfect low cheat. This is like perfect cheat. Golden, that volume drop, it's just so perfect. I gotta add this to my model books, even though it failed. I'll add it to my failed setups.
Yeah, I mean, and look how close we're getting, especially on oil and gas names and energy names. I've noticed that the tighter you can get to that 21 EMA on those and not buying extended pivots, the better. And we pull back on lighter than average volume. We get that volume dry up. We also get volatility dry up, like 4 or 5 trading days, very, very tight action, but a good closing range the previous day that sets up a nice low cheat right around, what'd you get in at 66.30. Awesome entry point, awesome setup. And then, yeah, the next day, I think this was this over a weekend? Yeah, it was. So Monday we gap down, but we hold pretty good daily range and then shoot higher the next day. I actually sold everything like into the close this day because we were right near the previous resistance, and it was kind of fine that it got going a little bit. I thought if oil and gas can get going, then I can find other kind of lower entry points around the 21 EMA on other names that I've been watching. I just don't want to be holding too much when we get to a new high into an area where I know sellers are going to be lurking. And since then, like you said, like it went up a little bit more, but nothing notable. And then we've since crashed under the 8, under the 21, and now we're back to the 50-day and right back to that pivot. But because you sold into strength, you made 7.5% on the trade. It was your best trade on a percentage basis in August of 2022. And I love what you said. You got to print this setup out. It's a model book setup. And me and you, we don't know Warren Buffett. We don't know what he's going to do. But a setup like this, you roll the dice on because you can keep a tight stop loss under the 21 EMA. And then over 100 trades, maybe 70 of them work out in your favor. And that's a win rate that it doesn't matter if you're getting two times your risk. That's going to pay out over the long run. So I would say this is your best trade just because, well, one, it was your best trade. ALT was also kind of an A+ execution. You like 2% win, that's fine, but A+ execution. But really nice trade on OXY. And then last stock I wanted to cover was LQDA. This you took for a 6.7% loss. We've talked before this. This was a smaller position size, but go ahead and walk me through this one.
Yeah, and I'm not proud of this one. So it, from the lows on 7-19, I was looking at it, it went up 160% in 25 days. And I really like to see that sort of power. And then it goes into this 1 to 2 consolidation. And I got to say the Marcus Smith charts make it look really ugly and not tight at all. But yeah, on my charts, those 2 days, those 3-ish days, it got really tight with some good volume dry up. And and I bought, again, very small amount of shares. It's just very small. So I took it, and the next day, it just completely flushed. I mean, I think it went down 20% in 5 minutes. I mean, this is this is a very illiquid stock. I agree with that. But one thing about liquidity, I like a little bit less liquidity because it means it's less followed, and the supply demand dynamics do sometimes work a little better. But I think there is a cutoff point where it does actually just go bad. But I'm not proud of this trade because it was too short. It was kind of a power play, kind of wasn't. But the main thing is it was just too short,
Yeah, a couple things like on the power play, when Leif talks about high type flags, he says that you really want the pull, so like from the bottom to the top, not to have overhead resistance. Like a little bit's okay, but the fact that this went from 7 down to 3, now we're right back to a previous resistance area, you probably size it down a little bit, which you did. I'm not calling you out for that. I'm just saying for the viewers. And then, because we have this very quick move down, you have to use a hard stop or be glued to your computer and not be emotionally attached to like a position before you take that. But 6.7% loss, you're going to get that. And I guess one thing that I would caution in bear markets, less liquid stocks. Yes, they can go up very fast, but they can also go down very fast. And
just like this,
people are trying to pull liquidity out of a bear market more times. So thinking back to probability, more times they're going to be pulling out of in a liquid stock. And when a big player tries to get out, you see a 20% decline pretty quickly. So like you said, I would say one of like your worst like setup trades.
I think it probably is the worst.
In a strong group, which is like, again, I'll give you that. That's a little bit of probability that we're adding to the trade. It was tightening up. But thankfully this wasn't a 20% loss, 6.7%. You're writing it down. It might hurt a little bit, but you didn't put large position size on it. So it doesn't.
It barely hurt. Yeah. It's like, I think it was like 10% of a regular position size.
Perfect. All right. We just covered kind of Charlie's background, the questions he had, what he does well, what he can work on, and then the trades that he made in August. Overall, Charlie's doing an unbelievable job, both in his own personal trading journey and surviving this bear market that we're seeing in 2022. So although his win rate was low, his average loss on a loser was only 3.7%. That's something that everyone can take away. We want to really minimize losses. And if we can position size smaller on our setups that aren't A+ setups, that's going to help us out in the long run. So Charlie, thank you so much for coming on. This was the first trading audit that I've done. If you guys are interested in conducting our own trading audit, you can email me at stocktrickswithnick@gmail.com. If you guys enjoyed MarketSmith and want to give it a try yourself, there's also a link to try that out. You can do 3 weeks for $20, also using a link in the description below. Charlie, thank you so much for coming on. This was awesome. You did a great job. If you could go back to when you first started trading, would you do anything differently, or like what advice would you have for like anyone watching or your previous self?
No, I don't. I wrote it down. I don't think I'd change anything. You know, even though I took so much losses, and when I actually realized those losses, you know, it hit my confidence a lot. You know, taking huge losses, it makes you really feel like crap. It's like, what am I doing wrong? How can I be so bad to take so much losses? But I wouldn't change it, because I don't know about you, but I have never heard any successful US investing champion, any successful market wizard. I don't recall any of them not blowing up or losing a lot of money in the beginning. It's like it's part of the process, because if you don't lose a whole bunch of money in the beginning, you're gonna lose a lot of it in the future. You need to have it ingrained in you, so you respect risk. You never let it get out of control. You have to take it. It's part of the game.
Yeah, and even if you lose 100% of your account when you first start trading, it's going to be a lot less money than losing 100% of your account when you're 15 years into it. So making those larger losses when we're younger, when we have smaller account sizes, although it hurts, it's definitely the market tuition is worth it there. I think there was a ton of great information in this trading audit. Definitely go back and watch it. If you guys enjoyed the video, please leave a like, subscribe to the channel. I make my own kind of breakout watch list every Sunday, go live on Tuesday nights at 7 p.m. Central. And then do other trading related videos on Thursday, whether it be trading audits or just general trading videos. So thank you guys so much for tuning in, and I'll see you guys in the next video.